The biggest shift for the dollar in 50 years is happening right now, while most people are still checking their savings account and feeling completely safe. It is not. Gold is behaving strangely. Silver is getting violent, spiking and crashing in the same week. Bitcoin, the thing everyone called digital gold, the thing that was supposed to protect you when everything else fell apart, is starting to crack under pressure instead of holding steady. And underneath all of it, the dollar itself, the thing every single one of us treats as the baseline of reality, the thing we never even think to question, is quietly losing the position it has held for 50 years. I am not saying this to scare you for views, and I am not saying it because I read one scary headline this morning. I am saying it because I have watched this exact pattern play out before in other countries at other points in history, and because I have made real money mistakes, learning it the hard way, mistakes that cost me more than I want to admit. What is coming is not a normal market correction, the kind you shrug off and wait out. It is a shift in the entire operating system underneath your money. And if you do not understand what is happening right now, you are going to make decisions in the next 12 months that either protect your family for the next 20 years or quietly wreck them without you even realizing it happened. So let's talk about it honestly. No hype, no fear-mongering, just what is actually going on and what it means for you. Before I go any further, I need to ask you for something, and I'm not going to pretend otherwise or bury it in the middle of the video. What I am about to walk you through took me years and some genuinely expensive mistakes to actually understand, the kind of understanding people normally pay real money for in a seminar, a paid newsletter, or an hour with a financial advisor. I am giving it to you for free right now in the next 20 minutes. All I ask in return is that you hit subscribe before you keep watching right now, not later, because I promise you will forget the second this video ends. This channel only exists because people subscribe, and if what I am about to share ends up being useful to you and your family, the fair trade is 30 seconds of your time. Go ahead, tap it now, and let's get into it. Let me start with something that sounds almost too simple, but it explains nearly everything happening right now. And once you see it, you cannot unsee it. No currency stays on top forever. Not one in the entire history of money. Not the Dutch guilder, which ran the world's trade and finance for close to 100 years before quietly fading into the background. Not the British pound, which was the currency the entire planet settled its bills in, the one every major trade agreement was priced in, right up until it wasn't. The pattern repeats itself with almost eerie consistency, and it is honestly a little boring in how predictable it is once you know what to look for. A country becomes powerful, usually through some combination of innovation, military strength, and trade dominance. Its currency becomes the one everyone trusts, so everyone starts holding it, pricing goods in it, saving in it, settling international debts in it. That trust lets the country borrow more than it ever could on its own merit, because the entire world is lining up to lend to it at low rates. For a while, that borrowed money fuels even more growth, more infrastructure, more global reach, and it genuinely feels like the good times will never end, because from the inside, they don't seem to. Then slowly, at first almost invisibly, the debt gets large enough that the only realistic way to manage it is to quietly make the currency worth less over time, print more of it, inflate it away. Nobody announces this plan on the evening news. It just becomes the path of least resistance. The thing that happens by default, because every other option is more painful for whoever is in charge at the time. And once the rest of the world starts to sense that this is the plan, even unofficially, even if no government official ever says it out loud in a press conference, they start quietly looking for somewhere else to store their wealth. That is not a theory I came up with. That is simply what happened over and over across 500 years of recorded financial history. I used to think this kind of thing only applied to history books, to old empires, to countries far away from anything that could touch my own bank account. And then I actually sat down and looked at the debt numbers in front of me today, and I realized I was staring at the exact same pattern, just wearing different clothes and playing out on a different decade's calendar. What really got me was noticing how every single time this happened before, the people living through it felt completely normal right up until the very end. Nobody in London in the early part of the last century woke up and said, today the pound loses its throne. It happened gradually over years through a series of small decisions that each seemed reasonable on its own. And then one day people simply looked up and the world had quietly reorganized itself around a different currency. That is the part that should make you uncomfortable. Not the crash itself, but how normal everything feels while it's happening. Here is the part that should genuinely get your attention. The number that stopped me in my tracks the first time I really looked at it. The United States government now owes more money relative to the size of its entire economy than it did at the peak of World War II. Sit with that for a second, because World War II was, by a wide margin, the most expensive war in this country's history, requiring the entire economy to essentially reorganize itself around funding it. And we are past that level of debt right now in peacetime, without a global war forcing the spending, without an obvious external emergency to blame it on. The interest payments alone on that debt, just the interest, not even touching what is actually owed, are now larger than what the entire country spends on its military. Think about the weight of that for a moment. We are now paying more simply to service old debt than we are paying to defend the country. That is not a talking point from one side of the political aisle trying to score points against the other. That is a number you can look up yourself in about 30 seconds. And it is the exact kind of number that, if you saw it in a household budget sitting across from a financial advisor, would have that advisor telling you calmly but seriously that you have a real problem on your hands. The way governments have historically dealt with a problem like this is almost never by suddenly becoming disciplined and responsible overnight. It is by quietly letting the currency lose value over time so the debt becomes easier to pay back in real terms, even though nobody frames it that way publicly. It is the oldest trick in the financial playbook, and it works precisely because most people never notice it happening in real time. They just notice 5 or 10 years later that their money somehow buys less than it used to, that the raise they got last year didn't actually feel like a raise, and they cannot quite explain why. I remember years ago sitting down with my own numbers feeling proud that my income had grown steadily, and then actually adjusting it for what things cost, and realizing my real progress was far smaller than the number on paper, suggested that gap between what your income says and what it actually buys you is exactly where this kind of currency debasement quietly does its damage, invisible on your pay stub, painfully obvious at the grocery store and the gas pump. Now, here is the signal that most people are completely missing, and it is the part that made me sit up straight and pay very close attention when I first saw the data. Central banks around the world, not individual investors like you and me sitting at home, but actual governments managing national reserves, have been buying gold at a pace we genuinely have not seen in decades. Not a slightly higher pace, a dramatically, historically higher pace. Countries that used to park the vast majority of their reserves in dollars and U.S. Treasury bonds have been quietly shifting a meaningful chunk of that into physical gold, sitting in vaults, moving it in some cases out of foreign storage and back onto their own soil. Ask yourself, why would a government do that? Governments do not buy gold because they are hoping it triples in value and makes them rich. Gold pays no interest, no dividend. It just sits there silent, doing nothing but existing. They buy it because it is one of the only assets on earth that does not depend on another country's promise to pay you back. When you hold dollars or treasury bonds, you are trusting the United States government to keep its word, to remain stable, to not debase the value of what it owes you. When you hold physical gold, you are not trusting anyone's word at all. You are simply holding the thing itself with no counterparty required. And when the very institutions that print and manage currencies for a living, the people with access to information you and I will never see, start quietly stockpiling something that is not a currency at all, that tells you something important about what they actually believe is coming, regardless of the calm, reassuring statements they give in public interviews. And it is not just one or two countries doing this quietly in the corner. It is a broad, coordinated shift across dozens of central banks over the last several years. The kind of pattern that does not happen by accident and does not happen because gold suddenly became fashionable. Institutions with the best access to economic data in the world, the people whose entire job is to protect a nation's reserves, are voting with real money, and the vote is increasingly against, sitting entirely in dollars. This is where I want to slow down and talk about gold specifically, because most people fundamentally misunderstand what it is actually for. And I misunderstood it myself for years before I finally got it. Gold is not an investment in the way people usually use that word. You do not buy gold hoping it triples and makes you rich, the way you might hope with a growth stock or a piece of real estate in a booming city. Gold is insurance. That is the entire point of owning it, full stop. You do not buy fire insurance on your house, hoping your house burns down so you can collect a check. You buy it so that if the unthinkable happens, you are not wiped out. Your family is not starting from zero. Gold works the exact same way for your money, just on a longer timeline. For most of recorded history, when currencies got debased, when governments printed too much, when trust in paper money broke down even a little, gold quietly held its value. while everything priced in that currency lost value all around it. It has done exactly that again over the last few years, moving from being an old, boring, largely forgotten asset that nobody wanted to talk about at a dinner party to one of the best performing assets on the entire planet, even while barely making headlines or trending on social media. That is exactly how good insurance is supposed to work. It is boring for years, sometimes decades, until suddenly, in one specific moment, it is the only thing in the room that actually matters. I ignored gold for a long stretch of my own investing life because it felt slow, old-fashioned, unexciting compared to everything else I was chasing at the time. Looking back, that was a mistake born out of impatience, not out of any real analysis. And it is the same mistake I see so many people making right now, dismissing the one asset in their portfolio that is quietly doing its job because it does not give them the same dopamine hit as watching a stock or a coin double in a month. Silver plays a similar role, but with a completely different personality. And I want to be honest with you about that difference because it genuinely matters for how you think about owning it. Silver is part monetary metal, meaning it carries some of that same trust and insurance quality that gold does, and part industrial metal, meaning it actually gets consumed, physically used up in solar panels, electronics, medical devices, and manufacturing around the world. That combination makes it more emotional, more sensitive, more violent in both directions than gold ever is. When fear rises and people rush towards safety, silver can move fast and hard to the upside, sometimes outpacing gold's gains by a wide margin in a matter of weeks. But when the broader financial system gets genuinely stressed, when there is a liquidity crunch and large players need cash quickly, no matter what they have to sell to get it, silver often gets sold off hard too, because unlike gold, it is still tied to industrial demand and expectations about economic growth. This is exactly why you are seeing what looks like chaos in silver right now. Sharp spikes followed almost immediately by sharp drops, the kind of price action that makes people panic and sell at exactly the wrong moment. It is not silver breaking or malfunctioning. It is silver doing precisely what silver has always done during a major currency transition throughout history, moving faster and further than gold in both directions, testing the patience of literally everyone who holds it, including people who fully understand why they own it in the first place. If you decide silver has a place in your plan, the mindset that actually works is treating those violent swings as the price of admission, not as evidence that something has gone wrong. The people who get shaken out during the drops are almost always the same people who bought in during the spikes, chasing the excitement instead of understanding the role the asset was supposed to play. Understanding that pattern in advance is the difference between holding through it calmly and panic selling at the exact bottom. Now let's talk about Bitcoin, because this is the part where a lot of people are going to feel uncomfortable. And I genuinely understand why, because I know how emotionally attached people have become to this idea over the last decade. For years, Bitcoin was marketed and honestly believed by many smart, thoughtful people to be digital gold, a modern replacement for the old insurance asset, something that would hold its value or even climb while everything else around it fell apart in a crisis. Here is the honest truth about what we are actually watching happen in real time. In moments of genuine financial stress, when institutions and large funds need to raise cash fast to cover losses elsewhere, Bitcoin has been trading much more like a high-risk technology stock than like gold ever does. When markets get scared, people do not run into Bitcoin for safety. They run out of it, often specifically to raise cash to cover other positions. That is the exact opposite of what insurance is supposed to do for you. This does not mean Bitcoin has no future, and it does not mean the underlying technology behind it is worthless or a scam. It means that right now, in this specific moment of a major currency shift, it is behaving like a speculative risk asset, not a safe haven, and treating it like your insurance policy. The way you might treat gold could leave you dangerously exposed at exactly the wrong time during exactly the kind of stress event it was supposed to protect you from. I watch people learn this lesson with real money on the line, and it is a painful, expensive lesson to learn live instead of learning it now for free from someone who has already watched it happen more than once. To be clear, I am not anti-Bitcoin, and I am not telling you to sell everything you hold in it. What I am telling you is to be honest about which bucket it belongs in inside your own plan. If you are holding it because you believe in long-term technology and you can stomach the swings, that is a legitimate decision to take. But if you are holding it because you were told it would protect you the same way gold protects you during a currency crisis, the last several stress events in the market have quietly told a different story, and it is worth listening to what actually happened instead of what the marketing promised. So what does all of this actually mean for you sitting there, not a hedge fund manager, not a central bank governor with a team of analysts, just a normal person trying to protect what you and your family have worked hard for? It means the ground underneath the dollar is shifting slowly enough that most people will not notice until it is completely obvious to everyone, and fast enough that the people paying close attention right now are already quietly repositioning. It means the debt situation is not a political talking point to argue about at dinner. It is a mathematical reality that historically only ever gets resolved one way, through the currency, losing value over time. It means gold is doing exactly what it is supposed to do, quietly, without fanfare, without trending on any app, while everyone stays distracted, watching the more exciting, more volatile assets instead. And it means you need to be brutally honest with yourself about the difference between an asset you are speculating on because it feels exciting and an asset you are actually holding to protect your family's future no matter what happens next. I'm not telling you to panic, and I am not telling you to dump everything you own into one single asset because some person on the internet told you to do it. That would be reckless. And honestly, anyone telling you to do that does not actually have your best interest at heart. And what I'm telling you is to actually look honestly and without flinching at what you currently own and ask yourself one simple, uncomfortable question. If the next few years bring the kind of currency transition that history keeps telling us is coming, does what I own protect me, or does it depend entirely on the old system staying exactly the way it has always been? That is not a question with one correct answer that applies to everyone watching this. It depends on your age, your goals, your comfort with risk, your family situation, how close you are to needing this money. But it is a question almost nobody is actually asking themselves right now. And that is precisely why the people who do ask it early tend to come out the other side of these transitions in a completely different position than everyone else around them. Here is your challenge. And I genuinely want you to do this, not just nod along and close the video like it was entertainment tonight or this weekend at the absolute latest. Sit down and write out exactly what you own, every account, every asset, everything, no exceptions. Then ask yourself honestly how much of it depends entirely on the dollar staying exactly as strong and trusted as it has always been, and how much of it would actually hold up even if that trust started to crack around the edges. You do not need to become a gold trader or a silver expert or a crypto analyst. By next week, you just need to stop being someone who has never once asked the question. History does not wait patiently for people to feel ready. It moves forward whether you are paying attention or not. And the people who come out ahead during these shifts are almost never the ones who reacted after everyone else already noticed and panicked. They are the ones who quietly got informed a little earlier than everybody else around them. If this video gave you even one thing to think about differently today, do two things for me. Subscribe if you have not already, because I am going to keep breaking down exactly what is happening as this shift plays out in real time, week by week, and tell me in the comments what you actually own right now, and whether you honestly think it is ready for what is coming. I read every single one of them, and some of the most useful conversations on this entire channel happen right there in the comments. I will see you in the next one.